Hey there, my name's Curtis Lucas and you're watching Empire Crashing. Or at least that's what it's felt like the last couple of months. I just wanted to thank everyone who actually did join in for the live stream I attempted to do earlier this morning. Did not go according to plan. Such is life when you're trying things out for the first times. It doesn't always work out. I'm going to do a little bit more research before I attempt that again. But that is something I am trying to work towards. All the same, I think that this format will work a little bit better for me to communicate effectively the concepts and the information I wanted to communicate. Before we get started, I just want to remind everyone that, as always, you need to do your own research. You need to understand why you're invested in these stocks, why you're invested in any stock. In the end, you are the only one responsible for your own investment decisions, as I am the only one responsible for losing $2 million in the last 2 months. Or in this case, I guess it was roughly a month and a half ago. I also want to remind everyone to keep an eye out and watch out for scammers and impersonators down in the comments. They are as relentless as ever, so be wary and don't communicate with anyone that's trying to get you to message them down there. Even if it looks like it's from me, because it's not. But with that, let's get on with this video. Waking up early this morning, we had the pleasure of witnessing Mara reaching a low of $22.15. I can hardly believe this, and one of the things I was trying to communicate during the live stream that I attempted this morning was that we are getting extremely close to the $20 per share that institutional investors in Mara had bought in back in January. I think it's safe to say that Mara has definitely progressed a great deal since then. So if institutions were willing to pay $20 per share back then, how hard is it to pay $22 today? Or $25 or even $30 for that matter? But regarding institutional investors, I'm going to share an email I received from my father, which in hindsight turned out to be rather timely. However, I didn't heed his warnings, but I'm going to share with you what he sent to me back on April 12th, when Mara was actually trading at about $54 per share. This was the second last day before things really started to go south in a big way. He was trying to communicate to me that diversification at a time like this might not be such a bad idea. And regarding institutional investors, this is what he had to say. The big world stage investors see your money as theirs, and they want it. In some cases, it's a game for these big players. The big guns have to accumulate or sell their stocks over a long period of time because of the sheer volumes that these large predators are buying or selling at. These time periods can be days, weeks, months, or years of sideways price action. When the predators or hunters are done with their buying or selling, and have formed a price base, top or bottom, and have gotten all their sardines swimming in a school ball, that is when the feeding frenzy starts. These predators or hunters come in all types and sizes, and won't feed on each other as long as there's a feeding frenzy. Sideways price action in Bitcoin could mean a future move up or down. The longer the time period of the sideways Bitcoin price action, the further and sometimes quicker the move up or down, because the big predators need to devour a lot of sardines. Bitcoin sardines are a bit of a delicacy. Now he goes on to explain how institutions are not really going to let Bitcoin mess with their money. And he's not really, hasn't really come around as a Bitcoin believer. But he was right about one thing for sure. Bitcoin investors are a delicacy. And Bitcoin mining stock investors apparently are dessert. Along with this video, he sent me a number of links, including this one, to illustrate his point.
But with so few predators, the fish still have the advantage. All the sea lions can do is keep the sardines at the surface and wait for others to join them. Tuna attack from below, cutting off the sardines' escape route down to deeper water. With so many predators attacking from all sides, the advantage starts to shift away from the sardines. As the fish pack ever tighter, their shoaling strategy now makes it easier for the hunters. Copper sharks. They've scented blood in the water. Surprisingly, perhaps, the predators never attack one another. They work together to corral the ball of fish, taking turns to grab a mouthful. As the shoal gets ever smaller, each sardine scrambles desperately to hide in the middle. But now there's no escape. Brooder's whale finishes off the feast. Tons of sardines devoured in less than an hour.
Now, anyone that's had the pleasure of holding these stocks ever since then knows exactly what that felt like. And obviously, I only wish I had heeded that warning. But that doesn't mean that I believe this opportunity is dead. Obviously, with the benefit of hindsight, any one of us would have done this differently. And many people are beginning to ask themselves, what if Bitcoin mining stocks are no longer correlated to Bitcoin? Because they don't seem to respond, at least to the upside, the way they used to. But I'm forced to ask myself what exactly the role of institutions are in these investments. I think foolishly, many of us, including myself, believed that when institutional investors arrived, they would see the value in these and begin investing in them. But not coming from that world, we don't understand how these big investors, these big players operate. They don't have to play by the same rules we do. They have a lot of money at their disposal, and they can manipulate these markets in ways we can't even imagine, let alone predict. That whale that finished everybody off at the end of that clip, to me, that represents capitulation, where the big whale comes in and finishes every other weak hand off. Anyone else who was going to sell has sold, and the feeding frenzy is finally over. These are how bottoms are formed. Now, whether or not this, in fact, is a bottom, it's very hard to say, but it certainly looks like capitulation. Just as prices don't go up in a straight line, they also don't go down in a straight line either. So anyone that thinks this is just going to cut in half again without any signs of relief, that's not going to happen. And the fact of the matter is, the growth of these miners continues to accelerate. We've covered this over and over and over again. At this point, betting against this market is becoming riskier and riskier, because these institutions obviously know how to play the game better than any of us. But I do believe that playing the long game, playing the long-term investment strategy, buy and hold, is still going to win out overall. Sooner or later, the narrative will shift, and you'll start seeing positive articles being written for a change. They'll start actually understanding the fundamentals underlying and underpinning these companies. This will happen, of course, after they've been able to benefit from the downside, flip their positions, and then lo and behold, that narrative shifts. I can recall this happening with Tesla. On the way down, article after article, there was nothing but negative news and bad press, and analysts dropping their targets. This happened over and over and over again. It was ruthless. And then all of a sudden, the narrative changed. Nothing had really changed with the company itself. It was still on the same trajectory it had always been on. And obviously, not everybody got on board with that, but overall, people began to understand. Everybody wants to be early into an investment, but they don't understand what the consequences of being early are. It means that you see what other people don't, so you have to go against the grain. It's a very difficult thing to do, and sometimes it'll take months or years for that to play out. And you have to be able to withstand this kind of gut-wrenching volatility. And the lessons I've learned is not to over leverage yourself or take riskier bets, assuming that that story will continue. Because the fact of the matter is, the performance of these stocks and my entire investment thesis that they could rise potentially much higher than Bitcoin can in a shorter period of time still rings true, even after this drop. Showing a price comparison chart between Bitcoin and Mara stock shows what we've all known to date, that Marathon and all other Bitcoin mining companies have been dropping considerably more than Bitcoin, and in some cases in the opposite direction as Bitcoin. In the last 24 hours alone, you can see the drop this morning brought us down to a negative drop of 24% against approximately a 2% drop in Bitcoin's price. That is insane. And obviously, we have some external forces at play here. Now, there may be some people that would attribute the drop that we witnessed this morning as a result of the earnings report that was released yesterday by Mara. But obviously, we saw this kind of drop happen across the board. So I don't believe that was the cause of any of this. The fact of the matter is, what I read throughout that report was very promising, but we'll get into that in a different video. Over the last 5-day period, we had witnessed a total drop of 30% versus Bitcoin's, again, approximately 2% down. Over the last month was a drop of over 50%, 55% versus a drop of about 5% in Bitcoin. Over the last 3 months, we can actually see a divergence between the two. An overall increase of 18% for Bitcoin versus a drop of 31% for Mara. But as we go 6 months out, the picture begins to change. Bitcoin, over the last 6 months, has increased 265% versus Mara is up over 1,000%. And over the last year, of course, Bitcoin's increase of 482% compared to Mara's nearly 3,000% increase. Now, obviously, this is little comfort for anyone who may have invested near the local tops that we just formed. We're down 60% since then. But anyone who thinks someone who invested early doesn't feel this pain, I guarantee you it is felt. Your account doesn't drop the amount that mine has over the last couple of months and not feel it. Now, the risk we face here is obviously that Bitcoin decides to reverse its trajectory at this critical juncture. As of right now, I don't see any indication that that could be happening, but these are the risks that we're facing in the short term. On the other hand, if we get confirmation that Bitcoin is going to head higher, if we can break through $60,000 again and hold that, the outlook on these miners, I believe, will change dramatically. It's just very difficult to time exactly when that might happen. But if you've got the patience to hold out for the long term, and you're willing to continue to dollar cost average as time goes on, then events such as this are only going to help your investment because everything is on sale. I'm not going to do any deep dives into the earnings report that Marathon put out or the Bitfarms uplisting. I'm going to cover both of those and some other items in a separate video that I will also record and upload hopefully today, if not probably tomorrow morning. I just wanted to address what was happening right now in more of a general sense and just share my thoughts on what we've just witnessed and where we might actually be right now. So my advice would simply be, try not to be a sardine, because those are the ones selling at the bottom. It happens every time. That's all for this one. Now let's get back to empire building.